Hi, fellow traders. What's happening? I hope you guys had a great day today. Today, it was a little bit better day. Today, there was a lot of stocks that made some decent moves. Some made moves all day long. So the volatility slowed down, and we're getting some nice, uh, slow, meticulous moves. So, I'm encouraged by that. Now, yesterday was just a terrible day for me. I lost over $800, and it it started out with a decent trade. I made a little over $300, and then the second trade, I forgot to put a stop in. And typically, I don't put hard stops in unless I have to walk away or whatever, because yes, market makers do seek out stops. They're looking for orders to either fill, or maybe they play that game where they know um, retail traders buy breakouts or breakdowns, breakout to new highs, breakdowns to new lows. And most of the time, when we're buying off of support or resistance or breakout or whatever, the stock moves a little bit and then it pulls back. It goes the other way. There's a reason for that. It doesn't just happen organically. You may have people that they know if they pull it back far enough, it's going to trigger stop orders. So if you're buying it at a price, you're going to have to sell it at your stop. And if these big guys want to get larger positions, they're going to buy your stop. And they're loading up. They took your money, they're loading up, and then it's going to explode higher. And if you have your stop in the wrong place, or you have it around a popular technical level in with a lot of other people, 9 times out of 10 you're going to get hit, and it gets really frustrating sometimes. So you have to understand how all of this works. So that's why I say don't let your stop losses kill your trading. If you don't, stop losses are a tool, just like everything else. If you don't use a tool correctly, you're going to hurt yourself. It's what it boils down to. So we look at, stop losses are the main reason we lose money on those trades that we have the direction right. If we're shorting it because it's in a downtrend and we put our stop too tight, it's like we get in and we're only going to give it 50 cents. And the trend, what's going to tell you whether the trend breaks is about $2.50 away. If you put your stop 50 cents away, you know you're going to get taken out. There's no if and buts about it. Very rarely will you not get taken out. So your stop is too tight. Tight stops are not a good idea. Now, if you're scalping and you take all of these trades every day and you're looking for 15, 20, 25 cents, yeah, that's different. But I don't scalp. I trade what I like to consider trends. I do trade some momentum in the morning, but it's based on it following a trend. So when I look to put my stops in, it's got to be outside of the trend or outside of a technical level, but far enough outside to where it's not likely I would get hit. But I do I do read price action, and I do make decisions based on that, which I try to show you guys every day, that why it's important to be able to read price action, and why, if I bail out because I think it's going to rip against me and it comes back, I can always get back in. There's always a second entry. So, but if you sit there and you let it run against you and you take a big loss or larger than normal loss, if you get the trade right, you're still going to lose money. If you get in the second entry and it works, you probably still end up red. And that happens to me sometimes. I get caught in that, and it happens, but I've become more aware of that and, try to make adjustments. So, if you went through my classes, there's a process that I use for knowing where to put my stops. Now, obviously, the opening range trades are going to make these huge moves, and it's just the most educated guess that we could have, putting stops in for opening range trade. For the trades later in the day, the trend continuation trades, when they're breaking channels, that typically works a lot better at that time. But the opening range trades, you're going to have to give it, a lot of room. Most professional traders, they don't put in stops. They manage their risk by position size. Plus, if they don't feel confident in a trade, they don't take it. So we have to feel confident. If we trust our process and we trust our ability to execute it, it has to reflect in our stop. So just to kind of give you an idea of the two types of strategies that I use. Now, this is a snapshot from Tuesday when I traded AFRM. Okay, opening range trade, I took it on the break of the previous day's low. I get in, it sells off a little bit, and it rips up. Why did it do that? I would think that, and what I'm assuming is that these people know that we buy breaks. We buy low of the previous day breaks. We buy the high of the previous day breaks. We buy pre-market low breaks. But they know, and so they'll let it go. And most of the time when we get in, it may go a little bit, and then it turns around and runs against us. Now, if you see that in the price action, you see that happening, there's nothing wrong with bailing out and then setting back up to get in under the low. But if you take the second entry, you've got a high up here that you can base your stop off of. That if you take the high out of the last bounce, then the trend is broken and you need to get out. So after it made this bounce and it came back, I got in once it broke the low, and yeah, it tried to bounce again. But guess what? They're not going to fool me this time because I've got a level right here to base it off of. And it didn't take it out. So I stayed in this trade and it worked out. Worked out perfectly. So I only lost a little bit here, but I made, 3 or 4 times what I lost here because I was in tune and, I stuck to the trend. Now I look at this and I realize that technically it would have to take this out before it, the overall trend down is broken. But I'm not going to sit here and hold it for $3 or $4 when all I'm looking for is $3 or $4. Okay, it doesn't make sense. So I'm going to read price action. If it starts to go against me, I'm going to bail out real quick, wait for it to reject, catch the second entry. Now I've got something closer to base my stop off of. And, if it takes this out, then I know, hey, I'm wrong. So that was how I managed this on Tuesday. Now, we all know no two trades are the same. You can't come in and start doing the same thing for every trade. You do that in the beginning, but what it does is it takes you through a lot of pain, and you learn from that pain. You've got to go through that. But once you've gone through it, once you learn from it, then what you need to do, you should be at a point where you can read price action, where you can read the trend. You know what will happen on the chart if the trend is broken, what technical levels are in play, all of those things. After 3 to 6 months, you should be able to do all of that if you focused on the right stuff. So, that's where I am with this. So now let's take a look at today. All right, so I got in AFRM today. Ironically, this is the stock that I lost about, I don't even know how much I lost on this, but I ended up losing $800 some yesterday. But today, I got in. All right, here's the opening range low. So we put in a bottom here. If I go long and this thing comes back and takes out the low, technically the uptrend is broken. I need to bail out. Okay, so that's what I was looking at today. There was so much support here between where I got in and this, to where I felt comfortable staying in this trade. And this thing never really gave me any indication that we were getting ready to wash. A lot of times you don't see it. It just happens like that. But my stop was just below the low of this. Once this takes out the trend, I'm out. But I know this trade had big potential. Okay, what was I looking at? The option scanner. Even yesterday, this is from today. Yesterday we saw 125 calls. Then we saw 130 calls coming in. 135s. We saw that yesterday, and we saw this coming in again today. But I'm looking for this to try and get to 130 by tomorrow. I didn't think we were going to get there today, but I knew we had a huge window to get in. So this little bit of risk for this huge of a move, are you serious? So that's what we're looking at. If I had placed my stop too tight, yeah, it would have been just like yesterday. I would have lost a couple $100 to, and I would have made a killing on it. But you shouldn't have to. If you're reading the price action, you're reading the chart, you shouldn't have to worry about bailing out of something that's actually working. And so this was our trade today. Solid trade. I don't know how much I made on it, because as you can see, we're still in the Nike earnings trade. We'll look at that here in a minute. But it's all about making sure that your stop is not going to strangle your trade. It's not going to kill your trade. And you don't want to have to, you're going to get to a point where you shouldn't have to give some of that money back because you're in training. You beyond that point. Yeah, when you start trading, you don't have the patience, you don't have the discipline, you don't have the ability to read price action that right, then you have to be more mechanical. And, you have to just let the trade either hit your stop or hit your profit target. But once you get to this point, and I have several people that are at this point that I'm trying to show them this is how we have to trade. You should be at this point now. Look how much more money you can make trading the same position size. Just allowing your trades to work. Finding the right stocks with the biggest profit potential and just letting the trades work. And that's what this is all about. Everything is a progression. If you're still stuck in the same spot you were in 6 months ago, we got to get you out of that. You may be comfortable, but the only way to grow is to continue to slightly make yourself uncomfortable. And not to the point where you fall apart, but you do it in steps. And pretty soon you're going to be comfortable risking $500 to make $2,500 or $3,000. Versus now you can risk $100 to make $300 or $400. You got to get there. You gradually get there. You take steps, and before long you're gonna be there. All right. So the next trade, the trade we took this afternoon. There was only a couple of you guys that were left. Most people bail out earlier. Was NKE. All right, so NKE on earnings. Here again, I get in on the break of this low, and what does the stock do? It pushes up. Where's the break in the trend? Where is the break in the trend? Up here. So if it took this level out, then this trade is dead. But it pushed up, it sold off, and it came down and it hit one target. I still got a lot to go. The next target is 152, then I'm looking for 150. I was looking for this thing to continue to go, but it didn't quite make it. All right, well, we're still technically holding to where we could potentially sell off. It's 7:33. I've got 27 more minutes before I take this off. I'm not going to hold this short overnight. Wherever it is, I'm going to take it off. If it's a bad trade, it's a bad trade. But we still made some money on it. It just didn't get to where I didn't make near as much on it as I wanted to, and it happens sometimes. It's not going to be perfect all the time. But as you can see, this is the strategy, the 5-minute opening range strategy, except for in this instance, we had the extra long bottom wick here. And what do we do sometimes when we have this long wick? We enter based on the low of the body, and then we look to trade the wick. And we want to leave some on just in case we break through the wick. If it breaks through and it gives us a shot to re-enter, then we'll do that. But you can see Nike, it just kind of got held up. People are not willing to panic out of this just yet. So, still going to hold on, see, what we could do on this, how much more money we can make. And then I'll be off and running. But just to give you an idea of how my week is going, it's terrible. Red day Monday. Okay, Tuesday we did make 383, but yesterday that was the big one. I haven't had a red day like this in a couple of months. So I was due for one. I'm not gonna beat myself up about it. But I did go to the lake and throw a hook in the water. And had the hook in the water for an hour before I even put bait on it. To give you an idea of how bad it was. But That's gonna do it for me. I do have the other segment ready for building consistency in your trading. I just wanted to do this stop loss thing now because, you know, I have people that just don't understand. If you're looking at it from a amateur's mind and an amateur's lens, you're not gonna understand it. The right thing to do is ask questions instead of make judgments, because at this point you just don't have a clue. You talk to a professional trader who does this for a living about stop losses, they're gonna laugh at you. So, it's something that you kind of work your way out of. What they do is they have stop levels on charts. They know how much money they're willing to risk. And they kind of go from there. So, this is something that we have to have. It's a necessary evil. It's a tool when we're starting to grow and to learn how to trade. As we get better, as we get more confident in our process, we're able to properly place our stops. We're able to properly risk what we need to risk. And we can adjust that by position size. If we need to give a stock $4 and you're not comfortable giving it $1,200 because you want to trade 300 shares, trade 100 shares. And then if it goes against you and it comes back on the second entry, add to it and go on your full size. Because 9 times out of 10, the level that you need to base your the technical level that tells you that the trend is broken is probably going to be narrower than the original one. Because if it bounced, it should have made a lower low, a lower high. If it made a higher high, then you should have been out of it anyway. So, just things that you got to think about, and I try to show you this every day. But if you don't understand, you got to ask questions. And that's the only way you're going to learn. So, I hope you guys have a great rest of the evening. It's dark here now. God dog. And I got to go cook. So, I will catch you guys tomorrow.